Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The yen breaches the key psychological level of 150 against the dollar as the market prices in a greater chance of US and Japan yield gap narrowing next month. Investors have their guard up with political chaos in France, sending its borrowing costs to almost the same level as crisis-scarred Greece for the first time ever. And we'll look at the global implications with Martin Horne, the head of Barings Europe and the chair of firm's European management team. He's also the global head of public assets. And India just became India's only full-service airline after it merged with Vistara, with jet orders worth billions in play. We speak exclusively with CEO Campbell Wilson about how he plans to restore royalty and loyalty to the Maharaja and the role Singapore Airlines will play. All right, let's take a look at the yen. It breached at 150 level. It is at 150 right now. Bear in mind that we had Tokyo CPI coming in hotter than expected. Swaps market pricing in a 60% chance of the BOJ hiking rates next month. Of course, that is the meeting that is closely on watch. The yen currently trading at 150.11 and change. The yen breaching that 150 level just slightly earlier. Now to Europe, where we're seeing growing market anxiety over the future of French Prime Minister Michel Barnier's government. He is staring down the threat of a no-confidence vote as he struggles to push through his 2025 budget bill. Barnier's latest concession is dropping a tax hike on electricity, but opposition parties are demanding more. The impasse is triggering a sell-off in French assets, including 10-year bonds, with the yields matching the Greek equivalents for the first time since the creation of the euro. The growing market volatility in France is catching some investors in Asia off guard who may have been expecting the bonds to be a safer bet, as we heard earlier from Ben Bennett, Asia Head of Investment Strategy at L&G Asset Management.
We know as well that lots of Asian investors have bought France bonds because it's a little bit like Germany with a little bit extra yield, but there's no such thing as a free lunch, is there? And we're starting to see that yield as high as it was back in 2012. I mean, that's the 10-year, 12-year high. So I think that could be another trigger to keep an eye on, and we'll be watching that before the end of the year.
Let's discuss the market implications with Martin Horne, Global Head of Public Assets and Head of Europe at Barings. He's also Chair of the European Management Team and is usually based out of London. Welcome to my city.
Thank you very much.
We're just seeing the worst bout of selling in French bonds. I mean, are we headed for a crisis?
Never a dull moment, is there? We're certainly heading for a political crisis. How expanded the economic crisis comes out of that is to be seen. The market is definitely trying to imply some discipline over an issue that we've been talking about for years and years and years, and that's this growth in government debt. And you've seen a nice comparison in terms of the kind of spread differential between Germany and France. I saw the earlier interview where they were making that comparison, that buyers had bought French debt thinking it was a bit like Germany. Well, no, it's not, because what's the difference? French debt to GDP is about 110. Germany's is 70. And whilst you've got political turmoil in both countries, so both political instability is a theme that you can say is equalised between those nations, the market is increasingly saying you've got to bring discipline about this explosion in government debt. And we're seeing that actually peripheral buyers are voting with their feet, and you've seen a huge amount of trading activity today.
French debt, not quite like Germany's, but is it quite like Greece?
I don't think so. And, you know, the reason this is getting so much of our attention and so much excitement at the moment is France and Germany are going to be the pillars of the European Union economic area. And you're going to see probably some ECB acceleration on the back of this if the political situation does unwind. And we'll know more next week. As I said to you earlier, every day I've got up this week, I've been travelling around the region, there's been a new headline to deal with. This is today's headline, and there's a few plays to go, but what they're dealing with is effectively a populist opposition that is forcing the government to make decisions that aren't fiscally prudent right now.
But are traders right in reassessing French debt? I mean, is it riskier? How would you be looking at it?
I think there's always been a differential between the government debt that you buy in the ECB to a level. And what I'm talking about really there is the tradability of that debt and the likely price volatility you're going to see with constituent headlines. But when it comes down to it, if we're talking about French government default, I don't think we're there. And, you know, Italy has shown that it can live with quite high borrowing costs for a period of time and get into an economically better place. France is going to have to play with quite high borrowing costs for a period of time. The UK situation in 2022 wasn't a bad barometer for the fact that investors can do without buying French government debt. They can do without buying UK government debt. And so if governments do things that are fiscally imprudent, like when Liz Truss put a budget out there that wasn't funded, the market will vote with its feet. And this is what you're seeing in France right now. It doesn't mean you can't trade out of it. And I'm not expecting or I'm expecting this situation to come under control, but it's going to make your life interesting because there's going to be lots of headlines.
Not just my life, but your life too.
My life,
I mean, increasingly, debt is an issue for
Yes.
traders, for the markets.
Yes.
I mean, bring in bond vigilantes. You talk about the Liz Truss moment. We're also seeing how bond vigilantes have been awakened in the US. Increasingly, the bond market is playing a bigger role in how assets are being traded.
A much bigger role. And you've had some real anomalies like, the equity market exploding upwards and bond yields going upwards. And the two things shouldn't necessarily align. I think the difference with the US situation, because again, we've got an indebtedness that the new government recognises, because you've got the Trump presidency announcing that it's going to take $2 trillion out of the cost of running the US government. The difference is the globe buys treasuries and doesn't have much alternative. So you can be zero in gilts and you can be zero in French government debt. It's difficult to be zero in treasuries, because where would you be? And so you do see price expansion and contraction to a level. But overall, when you look at flows, when the US yields gap wide, you get international flows coming in. And so people will go overweight, underweight, and they'll take some views along the journey, and you'll see that price oscillation. But the US has much more ability to kind of ignore the problem, if that's the right way to put it, because there will always be a buyer base for their debt at a certain price point.
For Europe, how concerning is this? I mean, we're in this situation even before the Trump administration imposes tariffs, and he has said he wants sweeping tariffs across the board.
Yeah, the complexity of this, because this was a headline of a few hours ago, the complexity of this plays with your mind, because what we think we've got at the moment is a strong dollar, and a strong dollar probably for a period of time. While the trade negotiations are going on, there's going to be inflationary concerns. We don't think central banks can be too aggressive around that. And if you've got a strong dollar and a devalued euro, what does that do to inflationary conditions in the European Union? The ECB needs to come in and probably needs to help support the situation. But if it drops rates in Europe by too much as a differential to what's happening in the US, then is that inflationary? We're going to have to sort of wait and see. It doesn't feel like it should be in an economically contracting situation, but that's stagflation, and we haven't really discussed stagflation seriously. And actually, the economic metrics of Europe, for all the sort of negativity, are relatively stable at the suppressed levels that they are. And we're going to have to see if this political situation, and therefore the bond situation, drives an impasse through the real economy.
How are you assessing the risk of the reemergence of inflation? How are you reading market reaction right now? And the levels we're seeing right now, how much of that is not being priced in? Yeah,
look, I would have given you a different answer a few hours ago, but actually the conclusion is the same. I think inflation generally shouldn't be just seen as an issue with the Trump government. The global economy is changing from the globalization where, as you know, supply lines were really stretched. The internet gave us access to the cheapest possible goods. And then about a decade ago, various things started happening, like the attempts to curb immigration, energy transition, the effects of climate change on crop yields, the onshoring of supply lines with geopolitical tensions, wage increases that are structurally pushed into economies following the COVID crisis. And these are structural inflationary pressures. Nothing to do with the Trump administration. Now, you look at the world today, and I think actually central banks have done a pretty good job in getting inflation back to a controllable level. But that last mile, that 2%, is all vexing everyone as to how they get there. It feels right that with the various pressures that we see in the world, that inflation is going to kind of stay at the level that we're at. But we're really going to have to see whether this move in French government debt is a headline-grabbing day, or it's something more significant that needs to be dealt with. And as we sit here today, it's a headline-grabbing day, but let's see next week and a few weeks beyond as to how significant this is and where it takes the markets.
So the risk remains.
The risk remains.
You know, we talked about how we're assessing headline after headline and things change within hours. How do you position for that? I mean, in my conversations with some of our guests earlier this week, they talked about how perhaps even 60-40 portfolio may not perform.
Yeah, and the answer to that question really should be over what time frame, because positioning for the next 6 months is quite a difficult thing and probably a foolish thing. One of the areas that I've been talking to clients about this week is positive event risk, because you think about the issues in the world that you're concerned around, well, trade standoffs and with the US government. That's a huge issue that affects basically the planet, and they seem to be taking on pretty much everyone. That could disappear relatively quickly if you think, as I do, that the US government's will have a pragmatic approach as to where it wants to get to, and you've got politicians around the world sitting in rooms trying to work out where the middle ground is because they want to get there too. It's in everyone's interest to find that middle ground. Ukraine war and conflict, Israeli war and conflict, these things could have a positive in terms of cessation outcome in 2025. So it's difficult to position around those and stay risk averse or hedge against, because actually look what happened just this week. Another of those headlines we had to deal with, just a hint that there was going to be a ceasefire in Lebanon, and oil dropped to a couple of dollars. That's how quickly the market reaction is nowadays. So positioning for the events, I think, is difficult. Positioning over a 3 or 4 or 5 year time frame is a more logical approach, and I think.
So how do you position for that?
Well, I think at the moment higher for longer seems on, and so we're liking income-bearing asset classes. There may be some income-bearing asset classes that get a lot more rich over the next few months as we see sort of the bond market oscillations play out. So I think the certainty of income, to me, that you can grab from the financial markets today is more robust than the assessment of earnings profiles in the equity markets. That's going to be a more difficult thing.
Recently, you were in China. I think you were in Shanghai. You were also in Taiwan. What are some of the key takeaways? Is there a sense, perhaps, that investors are looking more stimulus in the coming weeks or months? Yeah,
it's really so. Going to different parts of the world is one of the most interesting parts of the job, because you listen as much as you talk, and that's difficult for me because I talk. But we went to China, and the sense that I got from some of the investors that we met out there was they were less worried about the Trump administration. The viewpoint is they kind of know the playbook, or they think they know the playbook. He's a businessman. He wants to find that middle ground. They'll get to a deal eventually. They were more focused on, and I certainly got the impression that they were asking me to agitate for and state that the Chinese government should be putting more stimulus into the market, because they've had a really torrid 2 years on domestic markets and the returns from there. September's stimulus package is helpful. And you certainly saw, I think, on Wednesday, some data coming out saying that car purchasing and primary and secondary house sales, the numbers look pretty robust, double-digit increases. It's a short period, so we shouldn't get too excited about that. But what they really want is a sustained and consistent approach from the Chinese government that will then bring international flows back in. You've had some pretty intelligent, sensible people on your programs advocating China looks cheap. And I would advocate, yeah, China looks cheap. But there's a difference between doing fundamental analysis like that and saying it looks cheap, therefore people will buy, and actually investor confidence coming back because they think they understand the landscape and the direction of travel they're going to get from the government.
So having been to China, would you be advising your clients differently? Would your China portfolio look different? I mean, are you looking to pile in?
I think there's certainly a time where you should be thinking about China in a different way. I think, like most investors, one swallow doesn't make a summer, and you just want to make sure that the government is going to be consistent as opposed to consistently inconsistent in the way that it treats the markets and the way that it supports its economy. Overall, one of the positives that you got from the narrative from Chinese investors was, actually, we quite like Trump because it's going to force the Chinese government to put that stimulus into the marketplace, because there's going to be more uncertainty about what this all means for the stock market and for various companies operating there. And I can see that argument. That's not an unjust argument. But before you go all in, I think we want to see how the next 2 or 3 or 4 months unveil, because then we'll know really, is this a business transaction, or are we heading for something that's more political, ideological, and therefore leads us down a different path?
So you're not quite picking up the bargains right now. That's a fair assessment.
I think that's a fair assessment.
Where might the bargains be once you see additional stimulus?
Again, the sort of asset classes that I really like are driven not necessarily by Chinese government behaviour. I think globally where we're looking is fixed income assets because of the income component. We look for markets where there's technical differences and there's technical movements that mean that capital flow is going to go there. So insurance deregulation mean that private assets are going to continue to be well bid, and it's just a matter of how you can source them and how you can provide them to clients. But there will be a technical bid there that is driven by a change in regulation. And then you're going to look at some cycle points because, you know, how brave do you feel? Right now it's difficult to be an advocate of too many cycle situations when you've got a sort of government bond issue. But if rates do come down, how do you feel about sections of the property market? There's still structural inefficiencies in the property market that should make you look, you know, around logistics, around renewables, around IT infrastructure. And so there are areas within unloved sectors that maybe we should be talking more robustly about.
All right, Martin, good to have you with us today. Thank you for your insights. Martin Horne of Barings. Still ahead this hour, our exclusive interview with Air India's CEO Campbell Wilson. We'll discuss the carrier's outlook after completing its merger with Vistara earlier this month. Keep it here with us. This is Bloomberg. Welcome back. Now to the Philippines, where a feud between two of the most powerful political clans is escalating. Vice President Sara Duterte has today been granted a delay to questioning by the National Bureau of Investigation over alleged threats against President Ferdinand Marcos Jr. Duterte was summoned following her apparent threat to have the president, his wife and his cousin killed should she herself be murdered. Her father, the former president Rodrigo Duterte, earlier called on the military to intervene to fix what he calls fractured governance in the country. Bloomberg Opinion Managing Editor Ruth Pollard thinks Manila cannot afford to be distracted by the latest round of clan rivalry. She joins us now from Tokyo. And Ruth, as far as political feuds go, this one is pretty spectacular. What stood out for you?
Hi, Haz. Look, what stood out for me is just the level of violent bluster coming from the Duterte family. And what I think it shows is that they really feel under threat from the multiple inquiries that they're facing right now. Of course, you just mentioned Sarah had been summoned to the National Bureau of Investigation to talk about the threats that she has made. And she is also under investigation for allegations that she misused government funds. And of course, she denies these claims. And her father, of course, is under investigation over all of the deaths that were caused by his war on drugs. And now it looks like the government of President Ferdinand Marcos is softening its stance on whether it will cooperate with the International Criminal Court investigation into Rodrigo Duterte. So lots of pressure on that family right now.
Ruth, to start with, that collaboration, that partnership between Marcos and Duterte was questionable. I mean, it was questionable right from the very start. It was quite a mind-boggling kind of partnership.
It was, but these kind of partnerships where the president and the vice president come from very different factions of the Philippines political landscape isn't that uncommon. And we all knew that this marriage of political convenience wouldn't last, but we just didn't know that it would explode so spectacularly and so quickly.
You know, in terms of what's at risk for the Philippines with all this domestic infighting, I mean, it does have other problems to focus on.
Of course, I mean, just in the last week, the Philippines has been hit by 4 typhoons, which is, you know, a massive problem for the government to be dealing with. Along with that, I think under President Marcos, the Philippines has become on a much more firmer footing with the US foreign policy-wise, which is super important. The US is its treaty partner, and the US really relies on the Philippines to push back against China and China's incursions in the South China Sea. So Marcos has done a very good job, I think, in navigating this up to date, but he can't afford to get distracted by all of these political dramas that the Dutertes are creating.
That's right. And in fact, I think the Philippines is awaiting a credit upgrade. Where will this go next, Ruth?
Well, beyond these investigations, of course, we're now looking forward to the midterms in 2025. Now, Rodrigo Duterte and his 2 sons, along with Sarah, of course, not Sarah, Rodrigo and his 2 sons are, of course, running in the midterms, which is going to create more political drama and chaos for the Philippines and more challenges for President Marcos.
Ruth, thank you so much for that update. Bloomberg Opinion Managing Editor Ruth Pollard there. Taking a look at how Southeast Asian markets are faring right now. In fact, the Philippines in positive territory compared to the rest of the region. Up next, India CEO Campbell Wilson will be joining us exclusively as we look ahead to the demand for the upcoming holiday season here in Asia. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. With the end of the year approaching fast, and with it one of the peak periods for global travel, it's a great time to speak to our next guest, Air India CEO Campbell Wilson. He's just overseen the merger with Vistara, and like all big carriers, continues to grapple with supply chain issues affecting the entire aviation industry. Campbell joins Insight live and exclusively from Gurugram. Good to have you with us, Campbell. Long time no see. Let's start with that integration. How's it coming along? How much has been achieved?
Well, this integration, actually, there's two integrations because we're merging 4 airlines into 2. We've been working on it for the best part of 2 years. And through that period, we've harmonized, 140-odd systems, brought about 30,000 staff together, consolidated offices, merged aircraft fleets, harmonized procedures, and so on. But in the last 6 weeks, we've brought both to closure. The 2 low-cost airlines merged on the 1st of October, the 2 full-service airlines on the 12th of November, and we're in the process of just ensuring things continue stably. But the hard work really has been done. Now it's about optimization.
So would you say 80% of integration is done since it's just about optimization now?
Well, I'd say 100% of the integration is done. The optimization will be a more long-drawn process. And then, of course, bringing 4 groups of employees together into one organization means that people bring with them different cultures, different backgrounds, and aligning everyone behind a common mission with a common culture that is co-created by those 4 groups, I think is now the next challenge. And that will be an ongoing process.
So what next for Air India's transformation? What will be the focus?
Well, we've spent, as I say, the last 2 years on this consolidation of the airline group. In addition, we have inducted more than 100 new aircraft. We had ordered more than 500 aircraft. We have completely transformed the in-flight product on these new aircraft, completely changed a lot of our infrastructure, training, maintenance, and the like. And so the foundations, the ingredients of the future Air India are now largely in place. The big work left to do is actually the rehabilitation of a lot of the older aircraft that we inherited from the former owner. We're about a third of the way through refitting all of the narrow-body aircraft. That refit will be complete by the middle of 2025. And in early 2025, we commenced the refit of 40 wide-body aircraft with completely new seats, entertainment systems, and so on. And that will take probably 2 years to complete, given the sheer number of aircraft that need to be refitted. So that's really the focus. In addition to the physical product, of course, it's the culture, the service culture, the consistency, the refinement that comes from a big transformation. 61% of our cabin crew have been flying for less than 18 months. Their average age is 28. So we're putting a lot of investment and resource into uplifting and upskilling and making more consistent and more polished the service that people receive.
Campbell, we know that Singapore Airlines has about a 25% stake in this merged entity. I'm just wondering, what kind of partnerships might Air India seek with Singapore Airlines? Presumably that is what will happen next.
Well, Singapore Airlines, clearly being an equity investor, has a stake in Air India's success as well. We have a number of folk that have come from Vistara, which was a joint venture with Singapore Airlines that has merged into Air India, that have come across with their skills and capabilities. I think we've got a commercial partnership which we've recently launched with Singapore Airlines, which is a comprehensive mutual code-share agreement. And we're looking at ways to further expand that. Beyond just Singapore Airlines, we're a member of the Star Alliance, and we continue to talk to a number of the key carriers in Star Alliance, Uniteds and Lufthansas and others. And I think Air India is now taking its place at the table of the large global airlines that previously it didn't. And I think will play a more important role in both the alliances and international aviation moving forward.
Would a joint venture be a logical next step?
Well, I think we need to be a little bit more mature. I mean, Air India has come in the last 2 years from a state of really quite poor repair. And that also extended to the likes of the revenue management systems, pricing practices, distribution practices, understanding of alliances and how to make those alliances mutually beneficial as well as beneficial to the consumer. And we've made a lot of progress in all of those areas. And I think it's only now we're starting to get into the level of maturity that we can have a peer-to-peer discussion with some of these large international carriers. And so that's something to look at, but not something we're rushing into just yet.
Campbell, we know that the aviation industry has been saddled with supply chain issues. In fact, India has had to cancel several flights on the back of that. I'm just wondering how you're looking at the issue. Have constraints been addressed? Where are we headed?
Yeah, well, there are three major areas of supply chain constraint that have affected the industry, not just us. One is, of course, the supply of aircraft. That's the most obvious. We're all well aware of the challenges that Boeing has had on a number of fronts and the slowdown in production of at least some of their aircraft, and that has a flow-on effect. There's also been supply chain constraint with a number of the components that go into aircraft, and that also affects the ability to upgrade the componentry on existing aircraft, improve aircraft health, and so on. There's been constraints in engine supply, thankfully not really affecting us, but certainly affecting many airlines. Probably the one that has affected us most has been supply chain constraints around seats. We had committed, as I say, to retrofit the interiors of nearly 100 aircraft when you take narrow body and wide body together. And the seat manufacturers have been really struggling to design, to certify, to produce at the volumes that the industry has been demanding. And so in our case, the first and business class seats for both our big retrofit programs have been delayed by upwards of 6 and even 12 months, which is very frustrating when what we're trying to do is uplift the consumer experience as quickly as we can. About a third of our fleet is already done, as I say. It will progressively happen over 2025, 26.
So given that your transformation hinges a lot on plane deliveries and supply chains getting rectified, are you reassessing the kind of targets that you're setting for Air India?
Well, look, if the aircraft don't come, we obviously can't mount the new services that we want. We can't present the product to the customer that we want. But it's a matter beyond our control. We've tried to mitigate it by leasing in aircraft. We've leased in nearly 40 aircraft. We've bought aircraft that have been produced but not delivered to other parties. And in that case, we've taken 56 aircraft in that circumstance. But there's just a limited supply out there. I think if you talk to most airlines, they would say that one of their biggest challenges is simply the shortage of capacity and the fact that it's going to take a while to rectify. So I think we're all having to recalibrate our expectations and plans in light of this constraint that's beyond our control.
Once you get your planes and once the makeovers are done, how much will that add to your yield?
Well, I wouldn't want to put a number on it, but it's a complete transformation.
Put a number on it, Campbell.
Because, to be honest, we've got our internal estimates, but so far we've been exceeding the internal estimates of how we can improve yield. And improving yield is a matter of a few things. One, it is the proportion of seats we can fill, and we've increased our load factors significantly. The other is the type of fares that we can sell. Air India has pushed a lot further into the corporate market and into the international sales market than was previously the case. And then the quality of revenue management. We've deployed new systems, industry-leading systems in revenue management in both our full service and low-cost airlines, which allows us to better manage the sales that we get. So when you take all of those in totality, and then you add India's increasing affluence and the rise of a more wealthy market segment, you take India's expansion into the global supply chain and the increase in corporate business that comes from that. You also take into account the alliance relationships and the distribution advantage that gives when selling into other markets. There's a lot of factors at play, so that's why it's a little bit difficult for me to give you a particular number. Suffice it to say that we think that there is significant yield upside compared to the legacy operation.
So presumably as well, with new planes and so on and so forth, better services, you'll be able to charge more in terms of ticket prices.
Well, I think it's all about what is the average airfare that we can sell. We will continue to offer extremely competitive airfares, and as all airlines do on certain days of the week and certain seasons, and especially if people are willing to take a more restricted set of conditions. But on the other hand, we will offer high airfares for those that are very time sensitive rather than price sensitive, that want to have assurance of an available seat very shortly before travel. And it's really what is the number of airfares, number of seats that you sell at each particular level of airfare. And so I think given the investment we're making in product and service, given the expansion into new market segments, including the international and corporate market segment, it is more likely over time that we will sell airfares in the upper end of the range. But that's not to say that there won't be airfares available at the lower end of the range. That's just airline business.
Relations between China and India have never been better. In fact, they've been improving of late. And both sides are looking at direct flights between the two nations. I'm just wondering how you're looking at the growth opportunity. Is it realistic for us to be thinking of direct flights soon?
I think we are, this is a relatively recent development. Obviously, we are factoring it into our plans. It is certainly something of interest. But Air India has opportunities worldwide. One of the consequences of a lack of capital in the past was a lack of capacity, particularly in wide-body long-haul aircraft. India as a country only had 43 wide-body aircraft in commercial service at the point of privatization of Air India 2 years ago. You contrast that with Singapore's got 150, United Arab Emirates got 250 such aircraft. And so that's why we made a significant order of nearly 500 aircraft a couple of years ago to bring the capacity into the market. That means that we're going to be deploying a lot of these aircraft to connect India to many parts of the world. We think that Air India, India's connectivity to North America, to Europe, to Australasia, to Asia was far short of what the market could sustain, and we're trying to rectify that. It's a function of aircraft deliveries, and so we'll be doing it as soon as we possibly can.
Given your expansion plans and the growth targets, I'm just wondering, when it comes to the fleet, we know that China Southern is selling its entire fleet, Boeing 787. Would you be interested in obtaining that, or
well, I think we're
getting
taking
access to that fleet?
Yeah, I'm sure the team are looking at various permutations. We're bringing a new aircraft type into the fleet. Has its challenges. We've got to have engineers and pilots and folk to be able to operate an aircraft that you don't presently operate, and that takes time. And of course, there's a commercial consideration here of what is the cost of both acquisition and operation. But we've certainly not been shy of taking aircraft in such a condition. As I say, we've taken 36 leased aircraft over the past couple of years, in addition to 56 owned aircraft. So, yeah, we'll look at all opportunities. As I say, we would like more capacity, and we're looking at any ways to get it.
How soon might you decide?
Oh, goodness. The news report came out about 3 days ago. So we need to do some due diligence first.
You talked about your growth markets earlier. What are you betting on for 2025? Where are you seeing the biggest growth?
Well, as I say, for us, it was as much about the organic growth of this market as about the opportunity that already existed but was undertapped. The last couple of years, we've put a lot of capacity into North America. We've opened a number of new routes into Europe. We've added a lot of capacity into Australia and Southeast Asia. And so I think it'll be a continuation of that. Most of the new aircraft we receive in the coming 12 months are narrow-body aircraft, so the growth will be a little bit more skewed towards domestic and short-haul international rather than long-haul, but that's more a function of supply than of demand. We see growth opportunities really anywhere we look. That's the beauty and the frustration, I guess, of being in this market, in this airline. There's huge growth, huge opportunity, huge diaspora. It's a matter of being able to meet it.
In terms of challenges ahead, we know that for Indian Airlines, fake bomb threats is one of the issues. In fact, Indian Airlines saw about 1,000 bomb threats this year alone. How are you looking at this development?
Yeah, it was unprecedented scenario. I think I'm certainly not aware of any other of that scale where we were receiving 15, 20 threats a day. Obviously all had proved to be hoaxes, and it wasn't just Air India, it was airlines across India, but actually there was also a number of international airlines targeted as well. Look, whether it was people just trying to make nuisance, whether there was an element of maliciousness in it, I guess it's not for us to say. We don't have access to that. We're a private enterprise. We can only investigate so far. But the more important thing is, what do we do about it? When these threats came in, we obviously stepped up our threat posture and increased the surveillance and security at multiple touch points. But also what it prompted was a review of the national response mechanism. How do we assess the threat as a community, including government organizations, and then when the threat is assessed, what actually do we do about it? So as we've got more mature through this experience, I think the normalcy has resumed. We take every threat seriously, but the impact on customers and on operations has been reduced to the point where I think we're at almost back to a normal situation.
Well, the question really is, how do you actually counter the problem? Presumably, the threats are adding to your costs, causing a lot of delays for your customers, and you need to address the issue as soon as possible. I mean, what kind of collaborations can there be between airlines and governments, for instance? What are you hoping the government would do?
Well, I think just to be very clear, that any disruption that occurred really occurred in the first week, and that was 6 weeks or so ago now, and things have been very stable and normal since. So what we had done as an industry was, rather than different parts of India, in this case, having their own assessment teams with certain participants, there was a more centralized body. There were new participants, including cybersecurity and the equivalent of FBI folk included in this assessment, so that there was a more informed, a more centralized, a more consistent, and a more timely evaluation of every threat. Of course, from an airline perspective, your actions when you receive a threat are quite defined. You hold an aircraft back, you search an aircraft, you put it in a remote bay. If you're flying, you consider whether or not you should land. And so those practices continued as normal, albeit with a heightened sense of awareness. And I think there's a clear responsibility here on the social media platforms, because almost all of these threats were made on social media platforms. And in many cases, there was no governance nor monitoring by the platform owners. And so I think that exacerbated the problem, because once people saw it was so easy, and once people saw that there was no action being taken by the social media platforms, it just encouraged a continuation. Messages have gone to them, and I think there's been an elevated sense of responsibility on their part now as well. But it just goes to show that a public blackboard on which anyone can write anything has consequences, and those consequences don't just affect companies and employees, they affect customers, and they affect reputations of countries and other players. So I think this is not just a problem for aviation, it's a broader problem that clearly I think has not yet fully been addressed.
Campbell, just one final question before we let you go. On the show, we've been talking at length about the impact of the Trump administration. His policies are expected to be inflationary. We could see an environment where rates are higher for longer. Given that kind of possible scenario, how are you looking at the impact of your business? How are you positioning your business for it?
Well, as I say, we just have so much untapped opportunity, irrespective of who is sitting in which office. And we think that the Indian opportunity is amongst the best in the world. We're repositioning Air India to tap that opportunity. As in any environment, there will be curveballs and surprises, and we'll deal with them as best we can. But I think we are absolutely confident that India and Air India are going to play much bigger roles in global aviation than has been the case in the past. And all of the investments and effort that we've been making over the last 2 years, and we'll continue to be making, directed towards that.
And on that confident note, Campbell Wilson, CEO and MD for Air India, we thank you so much for joining us. Well, coming up, a major shake-up in K-pop superstar girl group NewJeans splits from Korea's top hitmaker. The details next. Keep it here with us. This is Bloomberg. Well, shares in Korea's music powerhouse Hybe fell in Seoul amid a dispute with its girl band NewJeans. The conflict has escalated, with the group saying it'll split from the agency. It's a rare revolt in the K-pop world. Avril Hong has been watching things unfold, and she's, of course, on top of the K-pop world. You know, we're talking about a girl band that is seen as one of the most creative, most important in the world today.
Yeah, I mean, they're chart toppers, right? If you look at TikTok,
I wouldn't know, actually.
You might not know, but, you know, we both have had to kind of defer to our younger producers on this, but they are really popular in the K-pop scene, and they are revenue generators for Hybe as well. They are seen as, you know, one of those groundbreaking girl groups, and this whole dispute, since it came to light to the public's eye in April, it's actually wiped off partly the reason why we've seen about $1 billion in market cap wiped off Hybe. This is, by the way, the largest music company in South Korea, and it's not just responsible for NewJeans, it's also responsible for BTS. I'm not sure if you know. Okay, another Korean group. But anyway, the dispute centers around the position of this longtime producer for the group. There was an internal audit that Hybe started in April, and you know, subsequently she was asked to kind of step down as CEO of one of their units, Adore, and then later on, a court actually said, they ruled against it. So the group is kind of protesting against the treatment of this producer. They cite discrimination, and they wanted her reinstated. So they kind of taking this move. And why this is all significant is we don't typically see revolts of this nature from K-pop groups, right? Because they are usually locked into years-long contracts, and they're kind of controlled by these really powerful management companies. So they are hesitant to resist. And in this case, it's also of consequence to Hybe, because if you look at the revenue that was generated by NewJeans last year, I think it was something like $80 million. So this is going to be something we watch for a while.
As you said, you know, the K-pop culture is such that it is well choreographed. It is a top-down approach. Nobody breaks ranks. You got to wonder what happens to NewJeans now. What's the outlook? Where it goes from here? The legal battles that may ensue.
Yeah, I think that's the worry, that this kind of transforms into a long-running legal dispute for NewJeans. It's going to hire a lawyer, it says. It's also aware at this point that it might not be able to continue operating under that name. And given how it has still years left on its contract, this might mean that the legal dispute, if we do see one, a legal battle of sorts between the group as well as the music agency, it could last for months or even years. So, you know, I think it's like a K-drama that we'll see a few more episodes of.
That's right, the pushing back on the micromanaging of such groups. I think that's pretty unusual. We wait and see for new developments. Avril Hong, our K-popper, thank you. Before we go, a look at our guests coming up next week. We'll talk luxury on Monday in an exclusive interview with Bulgari CEO. Keep it here with us. This is Bloomberg.